Solar investments. These have become immensely popular as a result of the passage of the Inflation Reduction Act in 2022. The Inflation Reduction Act, oddly, had nothing to do with inflation or reduction, but did provide us with a refundable credit that can be carried back up to 3 years. Today I'm going to be talking about a typical solar investment, how it works, what you get, what the restrictions are, and the benefits that might be available to you. I'm Rich Hofmann. I'm the SVP of Tax here at Jesani Advisors. I've got significant experience. I've been a tax attorney for approximately 25 years and a CPA much longer than that. First I'm going to talk about is a typical investment in a solar project. What do you get? Typically, there are really two pieces of benefit, tax benefit, that you get from investing in a solar project. The first one of these is what's called a solar tax credit. The solar tax credit is equal to 30 or more, sometimes up to 40% of the total investment in the project. Not necessarily your investment plus typically debt or other cash that's already embedded in the investment. So typically, when you invest in a solar project, you invest $1 and you get something more than $1 in terms of solar tax credits. When you invest in a solar project, the solar credit becomes available when the tax return is filed. And what that means is if you invest in 2025, you can't get the solar credit until the tax return is filed, which means your 2025 tax return filed in 2026 makes that credit available. Once you have that credit available, it can be carried back. I'd like to differentiate an investable solar transaction with one that you put in on your own house. If you put in a solar roof on your home where you live, that is personal. It is eligible for a credit, but that credit cannot be carried back. Only business credits can be carried back 3 years. So one of the phenomenon when you invest in a solar project is something called an at-risk limitation. And what that means is your tax benefit can't exceed the amount that is at risk. So if you invest $1 and you get $1.30 of solar credits and additional bonus depreciation, you must have something at risk. Typically, it involves one of two things. Usually something called a deficit restoration obligation. And what that means is at some point you are required to restore your capital account up to the amount of the tax benefit you received. Or in other cases, when you invest in the solar project, the end user prepays their solar fees for 20 years, and you are on the hook to repay that debt. So one of those two things typically occurs to cause your tax basis to go up and allows you to utilize those tax benefits in excess of your investment in year one. Generally, in year one, because you get those excess benefits, you typically invest in something called a flip partnership. And what that means is in year one, you get all the deductions, but going forward, somebody else, typically the promoter, gets all of the income. Now you have to hold your partnership interest for 5 years. You have to invest in the solar and hold it for 5 years. Otherwise, there is something called a credit recapture. Typically, what that results in is a bargain purchase being available to the end user in year 6. So when that occurs, usually either your deficit restoration obligation or your liability for the prepaid fees on behalf of the investor are forgiven in year 6. And really what happens is you get the big deduction in year 1 for credits and for depreciation. And typically in year 6, there is an income pickup. So when you do invest in these solar investments that involve a flip partnership, it is critical to look at them as more of an income shifting rather than making income disappear. So they'll really shift the income from year 1 to year 6 rather than make it disappear altogether. But the benefit you get is the ability to carry back those credits to a preceding year. Now let's talk for a second about the bonus depreciation you get in year 1. Depending on your investment size, that bonus depreciation can cause a sizable business loss in year 1. Much like other businesses, a solar investment is going to require you to be an active participant. An active participant means you are going to put in 100 hours and nobody else is going to put in any more time than you. Generally, that is an easy box to check because once a solar project is online, nobody's putting in any time. So you're substantially putting in all of the time on that project, and that allows you to be what's called a material participant. That is critical because if you have a business loss, that business loss can be used to offset your active income, W-2 income or business income. Critically important is material participation, but part number 2 is also important. Section 461L is what's called an excess business loss limitation. If your depreciation for married filing joint in 2025, if your business loss related to the solar activity exceeds $626,000, that excess business loss, the part over that $626,000, has to be carried forward to a future year. You are limited in terms of your business loss to $626,000 in 2025. So in summary, a solar investment can be particularly good for an individual investor if you've got a high amount of taxable income in the preceding 3 years, so 22, 23, 24, and you haven't done any tax planning. The solar credit can be carried back and you can benefit from that. Likewise, the depreciation can offset income in the current year. So if you need assistance with that, or you'd like us to take a look at a potential investment, you can click on the link below this video and we'd be happy to set up a call.